Good morning and welcome to Beyond the SEAF Model. I'm Jack Kosar and this is effective May 20th, 2024. Let's get started. Our SEAF signals for this week: utilities, financials, and technology. Technology replacing consumer staples. As you can see here, just a kind of quick programming note, reminder that occasionally we have our rankings and they'll be the same. So consumer staples and technology both have the same ranking of 14 this week. The overarching rule here is we then go to trading week. The reason that being is while this is broadly a momentum model, we do want to head where the money is, right? Follow the money. So we are following the money technology as the trading week one is greater than the trading week four for consumer staples. Kind of a unique week, right? We have technology and consumer staples both at 14, real estate industrials both sitting at 15, and communication services and energy both at 23. As you can see here, communication services and energy kind of see why we decided to lean on that trading week when it comes to having the same score. As you can see with energy, that strategic quarter one is very much hanging on. It was such a strong inflow that it's kind of keeping energy artificially in that neutral ranking. Even though you have the 11 at the trading week tactical month, and with communication services, being a little bit broadly, more across the board, 9, 8, down to 6, kind of showing that the trading week, is important. It's a part of the model, part of the broader sense of kind of what we're looking at here. Another kind of key thing I wanted to kind of highlight here is looking at real estate, going from 8 to 4 to 3. That 3 a bit was, almost a 0.1% increase in flows, not super strong, but third for the trading week. So showing a little bit of strength there. Heading into our heat map, a couple of things I wanted to highlight. Um, Relatively light flows compared to the outflow of energy, which was significant at minus 0.46%. And then with technology, pretty strong at 0.34%. Still a little bit under our average is what we like to see for strength. But, compared to the other ones, rankings 4 through 8 were near zero in terms of almost no change. So I still think that shotgun approach to markets outside of technology and energy is seemingly happening as we don't see a lot of conviction really outside of technology, though utilities, which has been a C signal for a couple of weeks now, is showing continued strength at a 0.2% increase. And that's not bad for the second in the trading week. But again, broadly seeing a little bit of weakness overall. Technology, some theories as to why, we try not to dive into things that are outside the data, but some theories as to why technology is moving up. Positive expectations for NVIDIA and some decent numbers from economic numbers from last week showing, some positive things for the economy and technology leads. I'll highlight this a little bit more in the Revo chart, but want to see some consistency for technology over the next couple of weeks in order to really make that bet. As we are a little bit confused for our top signals, defensive utilities versus offensive technology, all in SEAF signals. But again, we're not here to make predictions or try to tell you what we think. We're just here to show you what the numbers are telling us and following the money to which sectors are going to hopefully outperform based on how that money is flowing. And right now, money is flowing pretty aggressively into technology, consistently into utilities. We're seeing a little bit of foot off the gas going from a tactical two to a two in the tactical month to a five in the trading week, but still showing positive flows at ranking number of five. So financials definitely holding in there. And then just downfall of energy. As I mentioned, we've had some really strong outflows over the tactical month and the trading week for energy, being a little bit propped up by its number one. But as that falls off, we'll see energy fall further down the board and consumer discretionary, you know, showing what you're not seeing here. We're showing 10 across the board, but in terms of outflows, kind of lightening up as we're getting a little bit closer. That's nothing to say or do for consumer discretionary other than the conviction against discretionary is lightening compared to previous time periods. Heading into our rainbow charts, looking at technology, obviously we bounced up we were in the favored ranking for quite a bit of time. Took our brief stint as we've had this small negative relative performance trend going up. A little bit of a turnaround here as we're heading into favored. Like I mentioned earlier, would like to see a little bit of sustained time into technology as we've seen the smattering or what I'm saying is the shotgun approach in terms of investing for managers is they seem to be throwing money at a bunch of different areas, positive or offensive or defensive in nature. And technology is the one this week, though, because of the increased flow at 0.34%, a little bit more conviction in that trading week than if it came in a little bit lighter. So that was good to see with technology. It is a SEAF signal, and in the short term, we are seeing some relative outperformance. Energy, kind of on the flip side of things, energy is being artificially held in this neutral avoid area due to a really strong inflow that we saw at the beginning, end of February through March. That has been all but erased here. We're heading in the opposite direction for this relative outperformance, and flows continue to be really strong. The strongest net flow for this week at negative 4.46% was out of energy. So energy continues to fall from grace. Financials, as I said, financials softened just a little bit. We are seeing this still broader positive relative performance trend, a bit sideways, but financials is holding. And like I said earlier, we did see while it was close to zero, it was technically a positive inflow for financials. So financials kind of middling at this time. We'd like to see a little bit stronger flows out of financials, but still a SEAF signal and holding on to its favored ranking. Trading real estate. As I said, real estate's not a SEAF signal, but we are seeing a little bit of life in real estate. It was third on the trading week, almost at 0.1% increase. We'd like to see a lot more flows in there to really kind of get this thing up in that favored ranking. But this relative performance, negative, uh, negative relative performance to SPY downward trend seems to have stalled out, kind of flattened out, and as you can see, kind of nitpicking here, but ever so slightly pointing in the right direction for relative outperformance. This is not a steep signal, but I do like seeing this kind of peek its way into favored. And as we've seen in the past, we get into favored for real estate, it can hang out there for a couple of weeks, and we can't see that relative outperformance. So just this is definitely, obviously not a steep signal, but a place to watch as real estate's seemingly trending in the right direction, maybe potentially building some momentum. Last but not least, as I mentioned, utilities coming into on a trading week. It is our top ranked overall signal. Still seeing money flowing into utilities. We do have this nice trend in relative performance coming up. We are hitting a little bit of resistance in the right here in the relative outperformance, but as we continue to still see money flow into utilities, managers still favoring this space. And it is our top SEAF signal for this week. So we are going to remain strong on utilities. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and I hope you all have a wonderful week. Thank you.